Hello and welcome to Morning Brief Market Sunrise. I'm Ramzan Karmali, live from Yahoo Finance Studios in London. It's Wednesday, 29th October. Coming up on the show, Nvidia closes in on a $5 trillion valuation. Big tech firms are on deck with Google parent Alphabet, Meta and Microsoft reporting after the closing bell. And the Fed is widely expected to cut interest rates later. Well, before we start, let's check in to see where Wall Street might open later this morning. And it's looking like a positive day is on the cards, following on from yesterday's record-breaking day. One reason is the growing optimism of a trade deal between the US and China. Take a listen.
The President Xi of China is coming tomorrow here, and we're going to be, I hope, making a deal. I think we're going to have a deal. I think it'll be a good deal for both. And that's really a great result. You know, that's better than fighting and going through all sorts of problems.
Okay, first up, President Trump and President Xi of China will meet tomorrow. That's been confirmed by both sides. Trump said he expects to lower fentanyl-linked tariffs on China and speak to China's leader about Nvidia's flagship Blackwell AI chips, something he called super duper. The Wall Street Journal reported on Tuesday that Trump was considering cutting the 20% tariff to as low as 10% on Chinese goods over fentanyl. Next up, the Fed is expected to cut interest rates later. Markets are almost 100% certain that policymakers will signal a second consecutive quarter percentage point reduction in the federal funds rate. The overnight lending benchmark is currently targeted between 4 and 4.25%. Now, that's despite the fact that the government shutdown is getting close to dragging on for a month, leaving central bankers without some crucial data to base their decisions on. And the last thing you need to know, well, big tech earnings season hots up today. After the closing bell today, we hear from Google, Meta and Microsoft. Tomorrow, it's the turn of Amazon and Apple. The big questions for these behemoths are their continued investments in AI paying off? And how much more are they willing to spend to build out their data centers? Remember, just yesterday, Microsoft and OpenAI said that their new for-profit deal gives the Windows maker a 27% stake in the ChatGPT owner, worth around $135 billion. And the biggest of the Mag 7s, Nvidia, doesn't report till next month, but still manages to dominate the headlines. Nvidia's valuation is closing in on $5 trillion after it announced a slew of product updates, partnerships and investment initiatives at its GTC event yesterday. Well, our tech editor, Dan Howley, he was there.
A ton of announcements here from Jensen, from Nvidia. He's just had a press Q&A where he was discussing things related to the U.S. and China, basically saying how the U.S. is ahead as far as AI goes, way ahead as far as chips go, but there is the risk of falling behind if we don't continue to invest in AI and continue to see immigrants come in and start to work in those areas. He also, during the event itself, laid out a number of announcements, including a deal with Lilly, which will see that company take 1,000 GPUs to work on drug discovery. Also working with, obviously, the Department of Energy, building out 7 supercomputers for the department, including one that will have 10,000 GPUs, and then just a litany of other deals, such as with CrowdStrike, and so on and so forth. And this is just kind of the cadence that we see with NVIDIA events, where they host these big get-togethers, these GTC conferences, whether here in DC, the main one in San Jose, or across the world, and they have these major announcements, and it helps to push the stock price forward. I think it's worth pointing out this all comes as the company's market cap closely approaches the $5 trillion mark. The company hit $4 trillion in July.
Well, it's earnings season, so it's only fitting that our market movers is dominated by firms that have just reported their earnings. Let's kick off with Caterpillar. Now, remember, it was one of the firms that Nvidia announced a partnership with yesterday at that GTC event that Dan was talking about. The aim is to use AI to build robots. Well, Caterpillar has just reported adjusted earnings per share for the third quarter that beat the average analyst estimate. Shares jumped in the pre-market, as you can see, up over 4.5%. Okay, next up, let's move on to Verizon, and it's a bit of a mixed bag for the telecom giant. Earnings per share beat the street's call, but revenue missed estimates. Verizon also revealed it had lost 7,000 postpaid subscribers, but shares are high in the pre-market, up over 3% there. Next up, we have CVS Health, and it has also just reported better than expected results, and pretty easily too. It also raised its adjusted profit outlook as the company sees improvement in its insurance unit. But shares are down in the pre-market as it's taking a $5.7 billion charge, writing down the value of its Oak Street primary health clinics for seniors. It's also closing 16 clinics later this year. Now, Brinker is the next one up. That's the owner of Chili's. And well, it beat expectations. Revenue for the quarter came in at $1.35 billion versus the consensus estimate of $1.32 billion. But shares are down there pretty heavily, as you can see, down over 9% in the pre-market. And finally, we've just received Kraft Heinz's results as well. And unfortunately for them, their results also missed expectations. And you can see there, shares are down over 1.5% in the pre-market. Okay, and remember today, we're also expecting earnings from 5 of the Mag 7, as well as the world's leading plane makers, Boeing and Airbus. They're both scheduled to report today. We'll be covering that here on Yahoo Finance. Okay, we're heading for a short break now, but when we're back, we'll be looking closer at that Fed decision later with Lauren Saidel-Baker from ITR Economics. Welcome back. So, as I mentioned earlier, the Fed is expected to cut interest rates later, despite the ongoing government shutdown, preventing central bankers from accessing crucial data to model their decisions. The question remains, how will big monetary policy decisions play out for the remainder of 2025? Well, to help answer that, I'm joined by Lauren Saidel-Baker from ITR Economics to get deeper into that topic. Lauren, thanks so much for joining us. Well, the market seemed pretty convinced we're getting a 25 basis point rate cut later. Are you? And what in particular are you looking out for when Jerome Powell takes to the podium?
Yes, I think this is about as clear as consensus can get. We will see 25 basis point cut today. However, the bigger question is what is the overall path that rates will take from this point forward? We're very likely to see some voices within that FOMC, maybe even pushing for 50. I don't know if we'll get dissent amongst the ranks, but the conversation of where do we go from here? How many more cuts will we see this year? Again, given that we don't have some of those gold standard government data sources that the Fed usually relies on to make these calls.
And that's crazy, isn't it? You don't have crucial data. I mean, we hear from the European Central Bank this week, the Bank of Japan, they're all going to have data to rely on. And yet, the world's biggest economy doesn't have crucial data. This is a crazy situation, right?
It's wild. What a crazy time to be an economist, I keep saying. But at the end of the day, we might not have the most recent data or even the most up-to-date data. Some of this is still being released, but just delayed a few days or weeks. But we do have other proxy series. So if we're looking from private sector data sources, we can get that about things like the retail sector, things like even the employment market. It's not perfect. Again, it's not that same quality standard that we would be looking for coming from an official government source. But given the preponderance of evidence, given that we can source from all of these different spaces, we will have an idea of what's going on.
And Lauren, I don't know about you, but I'm pretty confused. The consumer seems pretty confident right now in America, but the labour market seems pretty weak. Where are we? And how does the Fed navigate all of this?
I think the consumer themselves are pretty confused as well. We're in just such a unique environment where growth is positive, but quite sluggish. And what's really happening is that as an economist or as someone looking at the data, we can only point to the median consumer or the average, say, income of U.S. consumers. So at the end of the day, there's a lot happening beneath the surface. We're seeing the lower end of the income segment really get strained. They get hit harder by things like tariffs and inflation, whereas the upper income earners, they've been enjoying great stock gains from all of those wonderful earnings reports you just quoted. And so there's movement beneath the surface. And I think that lets us take one narrative either to the upside or to the downside. At the end of the day, our labor market, it's still somewhat in balance. We don't see the bottom falling out from under it, but the direction of travel is certainly weakening. And so I think people feel that. One metric we follow is the amount of time that someone is out of work, if in fact they are already out of work. So unemployment's still very low, but maybe it is harder to find a job if you are one of those unlucky few. That's where we're seeing some of this divergence take place. And that's why I think the narrative, the sentiment, doesn't necessarily match up with the hard data that we see.
Now, you mentioned tariffs there. President Trump has just in the last few hours said that he's very close to finalising a deal with South Korea. The Chinese and the US side have both confirmed that President Xi and President Trump will be meeting tomorrow. So there's growing optimism there of trade deals. But how does this all impact on the Fed and what they do next?
So at the end of the day, tariffs, the Fed is looking at their inflationary impact. Our best estimate at ITR Economics is that it takes between 9 and 18 months for tariffs to really flow through to final prices. So tariffs are very good at hitting pricing on the microeconomic level. That is, we put a tariff on steel and steel imports immediately go up in price. But on the macroeconomic level, it just takes more time for those indirect effects to feed through. So all of this negotiation, the back and forth, the on again, off again nature of tariffs, I think that's extending the time frame. Initially, when we were talking about tariffs with regard to inflation and the Fed, they were talking about looking for that one-time step up in inflation, and would it be something more pervasive? This is giving us that extended time frame. So it's certainly something for them to consider, but a deal at the end of the day, that's good news. I think these on again, off again deals, they've really been delaying activity. They haven't been canceling it outright.
And Lauren, just to summarise overall, where do you see the interest rate path going for 2025 and 2026 then?
2025 certainly down. Again, it's a matter of just 25, or maybe we'll go the full 50 by year end. 2026, I think that's when the path gets a little murkier. I am still very much concerned about rising inflation. I don't think this weakness in the jobs market is going to be sufficient to offset that other side of the dual mandate. So as inflation concerns start ramping up next year, I don't see significant downward travel in interest rates. I think I wouldn't be totally surprised if we're talking about rate hikes by the end of next year instead of further rate decreases.
And just very quickly as well, we were talking not so long ago about possible recession threats. Has that gone away now?
Never totally goes away, but at this point, the consumer, despite what they say and how they feel sometimes, they are still strong. Labor market is still hanging in there, so wage gains still outpacing inflation. That's giving me the confidence that we won't see a broad recession. At this point, though, it's just a matter of what data we have and what black swan events come our way.
Well, all we can do is hope for more data, and hopefully very soon as well. Lauren Saidel-Baker from ITR Economics, many thanks for your time this morning on Market Sunrise.
Thank you.
Okay, it's time for another quick break, but we'll be back with today's trending stocks, including a closer look at the firms beating the fears of an AI bubble by booming big. We'll be back shortly. It's time now for today's trending tickers, and we start with chips. So much for an AI bubble. Some companies are still experiencing an absolute boom. Look at this. SK Hynix, the main supplier of high bandwidth memory to Nvidia, is soaring in Seoul in Korea, up more than 7% today. It isn't necessarily linked to President Trump touting stronger trade relations with South Korea. Rather, this comes after the AI memory maker posted strong results amid surging demand for AI chips. A couple of key numbers. Operating profit surged 62%, and the company has already sold out its planned supply for all of 2026. And Nvidia is still at the heart of the action today, even if limited supply from SK Hynix and others may limit its speed. Nvidia is rising again to new records in pre-market. The latest catalyst, after some major announcements yesterday, Nvidia is now getting a boost from the optimism around Trump's trade talks with Xi Jinping and Nvidia's prospects in China. One bit of potentially bad news for whoever's invested in Nvidia's partnerships announced yesterday. Nokia, the Finnish cloud provider that rose more than 22% in New York yesterday, is now giving up a chunk of those gains, down sharply in Helsinki and down around 3.5% in pre-market in New York. Two other chip stocks to watch, Intel and AMD, which are continuing to rise in the pre-market. And finally, one outlier, the Dutch leader in chip-making machines, ASM International, which dropped on the news it had missed forecasts due to challenges in China. Now it's down over 2.4%. The second batch of stocks to watch, car makers. Mercedes-Benz shot up more than 5.3% in Germany after it confirmed its annual outlook and announced a €2 billion share buyback. It's actually a mixed picture, with profits slumping on weak China sales and tariffs. But analysts at JP Morgan called it a very strong quarter in the current context. Things look very different at Toyota, which is going against the grain at a time where most car makers are pivoting back to hybrid and combustion engines. At the Tokyo Motor Show, Toyota announced a more electrified fleet, including an electric Corolla concept car. Even though Toyota just announced record sales growth of 4.7% for the quarter, despite tariffs, the stock is deep in the red today. And finally, let's check the Magnificent Seven Club members reporting today and tomorrow. Let's have a quick look through them. Yes, Microsoft, Alphabet, which is the parent of Google, Amazon and Meta, and Microsoft there as well. Only one in the red, Amazon down just slightly off its, just down off the flat line there, as you can see. But the others all in the green. Tech stocks, well, they've been rallying this week on sustained AI demand and US-China trade hopes. There's been a slew of news around Microsoft and OpenAI, and there's a lot of anticipation as to what will happen once the latest earnings reports come out. And another reoccurring headline this week has been layoffs. Now, Amazon, Target and UPS have announced big cuts. In the case of UPS, the news that it would axe 48,000 jobs sparked a stock surge. It went up 8% yesterday. Now, the big question for investors is whether this marks the beginning of a rebound for the logistics giant. Here's Ken Hoexter, Bank of America's securities analyst.
Not only economically, we've seen volumes down. Amazon is taking 50% of its volume off of the network. So it was about 11% of their revenues or 20% of volumes. So half of that is going to come off of their network. You've got de minimis volumes that have disappeared. So UPS earnings are looking at half the level they were just a couple of years ago. So what do? You have to cut costs. And so in this unionized company, it's not something you can do very quickly. So they've had a lot of work to plan to match the Amazon glide down. The post office, all those volumes they used to hand to the post office came onto their network, and then you've lost de minimis. So you've got these programs in place, the one you're talking about, the $3.5 billion of costs and 34,000 employees. You're working to try to align today's business environment with the volumes that you're going to have going forward, which are less. So volumes are down 10% year over year, more than that on the domestic side. You've got this significant ongoing acceleration of the loss of volumes, and then who knows what's going on in the economic backdrop. So the cost-cutting program was a little bit maybe ahead of what we thought in terms of their target. That's why their fourth quarter margin outlook a little bit better on the domestic side. You're talking basis points of improvement better, but again, margins are still half of the level that they were just a few years ago. So you're trying to align the costs with the volume environment that we're in now.
Okay, check this out. Now, copper prices hit a record earlier today, and it's really no surprise. There are growing worries about a supply shortage. Copper is an industrial metal that is used in a wide range of industries, everything from construction to making electric cars. There are a number of factors that are driving the price of copper higher. First up, Trump's tariffs on copper. Next, copper mines are generally pretty old. And finally, some of the world's biggest mines have experienced production disruptions this year. Today, mining giant Glencore, which is listed in London, reported a 17% drop in copper production in the first 9 months of the year and lowered its forecast for the whole year. And it's not the first to make warnings regarding supply. Chilean miner Antofagasta also made a similar announcement. Now, it's also worth remembering that copper has had an interesting 2025, to say the least. Now, before tariffs kicked in, physical copper flooded the US market, which squeezed stocks elsewhere. So it's definitely one to keep an eye on, and keep an eye on Glencore, whose results were pretty positive as well. Okay, before our market check, let's get a reminder on the things you need to watch today. Here's Josh Lipton with a friendly reminder.
Time now for what to watch Wednesday, October 29th. We're going to start off on the earnings front. It is a big week for big tech with three Magnificent Seven names reporting on Wednesday. That's Microsoft, Alphabet, and Meta. Microsoft announcing first quarter results after the closing bell. Analysts expecting the company to say it's spending even more money to build out its AI and cloud infrastructure. Capital spending also in focus for analysts. That could rise by as much as $15 billion in 2026, marking a nearly 45% increase from 2025. But before the earnings fireworks, of course, the Fed is concluding its October FOMC meeting and announcing its interest rate decision. Wall Street largely expecting the central bank to cut rates by 25 basis points on Wednesday. Yahoo Finance will begin coverage of the Fed decision at 2 p.m. Eastern. And finally, President Trump is meeting with his Chinese counterpart Xi Jinping in South Korea. The summit coming amid continuing trade tensions between the two countries, but Treasury Secretary Bessent saying on Sunday that there is a very substantial framework for a trade deal.
Okay, before we go, let's check in on the markets. We start with some crypto. Bitcoin, it's losing a bit of steam right now as traders have been trimming their risk ahead of that Fed rate decision later today. Remember, that's 2 p.m. Eastern time. There's been a bit of a rebound for crypto recently, but today falling back. There you can see Bitcoin down over 1.25%. Let's move on to gold. And well, gold has fell to a 3-week low yesterday, but it's rebounding this morning, breaking back above the $4,000 an ounce level. In fact, all precious metals are on the up today, including silver and platinum too. Okay, let's move on to Asia. And Asian stocks in the main got a boost from optimism that AI will continue to drive profits at big tech firms. The Nikkei, there you see, up over 2%, hitting another record high, well above that 51,000 level now. Hong Kong shares were down. The Kospi back up another new record for the Korea as well. But remember, the Koreans and the US could be at close to finalizing that trade deal as well. So that's something to keep an eye on as well. Chinese local stocks, though, were rising, even though the Hang Seng is down today. Okay, let's turn to Europe now. And we had some pretty impressive results from some banks, UBS, Deutsche Bank, Santander in Spain, and they helped move the markets a little bit higher, but generally, as you can see, pretty flat. The FTSE is trading a lot higher and hit another record high there as well, up almost 0.6%. All right, let's check to see where Wall Street might open once that opening bell rings, and it's looking like another positive day awaits the US. As I mentioned, lots for investors to be aware of: those big tech earnings, the Fed rate decision, and of course, US-China trade talks in South Korea. Okay, that is it for Market Sunrise for this morning. Stay with Yahoo Finance for continuing live coverage of the markets and your money all day on streaming and online. Coming up next, join Julie Hyman ahead of the market open on Morning Brief. I'm Ramzan Karmali. Go own the morning.